Now, Eskom has returned to profitability, posting a profit after tax of 16 billion rand for the full year. This comeback was supported by a 15% rise in revenue driven by 12.74% standard tariff increase, debt relief support and a 14% reduction in primary energy costs. Together, these gains reflect the early success of Eskom's operational and financial recovery plans. And joining us now to explore Eskom's turnaround is company's Chief Financial Officer, Calib Cassim. Thank you so much for your time, Calib. Now, just as we start off the conversation, just characterize the level of financial strength that Eskom has demonstrated in this financial period, and really just expand on the drivers of that performance and that operational muscle that the power utility has built.
Thanks. Good afternoon to your listeners and your viewers. I think first and foremost, the catalyst to all of this has been the debt relief of government of 230 billion. Because it gave us a 3-year runway not to be stressing about going into the markets and borrowing and repaying the debt. We could then release 3 years capex in advance as well as maintenance requirements for the business, including the networks. That was then the cash flows that stimulated the generation recovery plan. And you can see, year on year, dropping from 329 days of load shedding to the 13 days. And again, where we are currently, that increases market confidence and investor and public confidence, right? So I think that is the big point. Why I'm stressing that, had we not had that, I think we'd still be struggling with the interruptions and the load shedding. So let's not underestimate what government and parliament approved on the debt relief. But again, we had to take that and then implement it in a disciplined execution of the generation recovery plan. And ultimately, where it's leaving us now, we've recovered in terms of breakdowns, some 6,000 megawatts of baseload capacity that we didn't have 18 months ago. That's available to us to meet the demands of the country. That's 1.5 Kusiles. That gives us confidence. And last but not least, what does this mean in terms of your expensive diesel options? We are running the diesel plants only in the evening. We don't even use them in the morning. We use them for an hour. So what we're seeing is year on year from 24 to 25, diesel expenditure dropped by 16 billion, right? From 34 billion to 18 billion, but it's still too high. Our target this year, we wanted to get to around a 12 billion number, a further drop. But as I've said, a sustainable level is maximum 500 million per month for emergencies and evening peaks. That should be 6 billion. So there's still opportunity for further efficiencies that will come through. And then last but not least, you touched on, with the debt relief and our debt coming down, we see the positive impact on our finance costs year on year by 5 billion dropping.
Now, you mentioned your efforts around decreasing the use of diesel. That, of course, also being seen in your latest financial results where diesel costs were slashed. But you do say you want to decrease that even further. Walk me through some of the plans there. We've also seen some new units coming through and also boosting your operational efficiencies.
100% correct, right? It's all about having choice for the more efficient and the lower cost of production in the generation fleet. So we've commissioned Unit 6 now. All the units from Medupi and Kusile are now available to choose from. And then secondly, as we go into the summer this time around, this will be the first summer in 3 years that we're going to have 2 units of Kuberg available to us, on the assumption that the National Energy Regulator grants us permission to rerun the second unit after the 7th of November. Kuberg, once it runs, it's the cheapest cost in our fleet by far, cheaper than coal, and it's the most reliable. So if I look at that, that gives us the confidence why we can further decrease our primary energy costs come FY26.
Now, another factor that's been boosting Eskom is the tariff increases, which in turn led to higher electricity prices for consumers. A tough balancing act here, right, when it comes to maintaining upbeat revenue while ensuring prices aren't too high. What kind of conversations, Caleb, are you having with government and NERSA when it comes to the tariff trajectory moving forward?
Yeah, so definitely we understand we have to create this balance between our sustainability and that affordability for consumers, be it industrial or residential. That is why, as the minister said, the chairman, ourselves, that we're looking at single digit increases going forward. And obviously, we would look in terms of our savings that we built into our corporate plan. It's 50 billion over 5 years, but there's a stretch to get to doubling that over the 5 years on the back of the better production savings. But we also believe in terms of procurement and efficiencies, there's opportunities there, and just doing the maintenance correctly the first time, that you don't have to come back and do it a second and third time. So those are all the initiatives where we can help ourselves. So going forward, single digit. However, we must also ensure that at the end of the day, in the prices, and the regular formula is this: only efficient cost onto the consumer, but also cover the cost of capital. That's the one area currently that we're not covering, because in your current determination of the price, we're only getting a 4% this year on our asset base. Over the 3 years, it goes up to 5 and 6%. Where that number should be for Eskom to be sustainable, that number should be at 11%. However, we can't close the gap in 1 year. We need to continue with this trajectory that add an additional 1% more per annum going forward, while we push ourselves to also reduce our operating costs. And then I think we can keep the price of electricity at single digits.
Calib, there are quite a few gaps to be closed here. You talk about the tough balancing act when it comes to those tariff increases, but also you have municipal arrears that are adding another layer of complexity, particularly when it comes to funding and your cash flows. I mean, you mentioned that the big contributor to those cash flows was the government debt relief package, but you cannot always go cap in hand to government. It's been concluded that Treasury's municipal debt relief program has been unsuccessful in stemming the escalating levels of arrear debt. Where to from here? I understand that you also have the distribution agency agreements. How far can those go in tackling the problem? And also, we've spoken about government support. So what does tangible support from the government look like on that front?
Yeah, so you're 100% right. The one red mark or cross in our recovery financially and operationally is the rear debts. It's grown from March 24 to 25, from 75 to 96 billion rand. And that's why we say this trajectory, if not resolved, will get to 300 billion in the 5 years. So what we've done, myself and the CEO have had about 10 days ago a good meeting with the DG of National Treasury, Dr. Duncan Peterson, and we both agreed that the combination of the proposal on the distribution agency agreement, where we partner with these municipalities, especially the bigger ones that are struggling to collect, better credit management systems, technical systems, billing systems, to improve their electricity environment and business unit, so they collect more and we then increase our current payment levels. But we got to do it as a partnership. Eskom has no intention to take over those. We've got the transmission development, NTCSA development plan to roll out. We got to transition in terms of just energy and do our own renewable technologies going forward. But if we don't work with them, we believe there's a lack of skills in many of the smaller municipalities. And that's where Eskom's expertise, discipline, execution can be a win-win for the country. And we know the municipality is not just about electricity, it's service delivery in general, including water. So there's no way we can ignore this. If we don't resolve it, the benefits from the 230 billion will be nullified. So that's why it's our number one priority.
All right. Well, we do have to end the conversation there, Calib. Thank you so much for your time and giving us insights on the landscape that Eskom is operating under. That was Calib Cassim, CFO from Eskom.